Hi everyone, let's go through my preferred bullish and bearish scenarios on all the time frames, starting with the macro bearish scenario where this is a 1, 2, 3, 4, 5, followed then by a corrective WXY structure, which is a 3-wave, and then followed by another 3-wave with targets of between 13 to 9K. Now, what I don't necessarily like about this scenario is that this wave 4 is very short in the time it took to form compared to this wave 2 over here, while usually a wave 4 takes more time and is longer in time compared to a wave 2. So that is definitely something to note in this scenario. However, if we then look at the bearish structure, it actually looks pretty good, where this is a nice 3-wave in the W, a zigzag, followed by an expanded flat in wave X, with the minimum target being the 382, currently sitting at about 29.6K. Also in confluence with this support area and resistance area over here, and also a weekly order block, before then a potential trading setup of laddering the shorts over here, stop loss safely above, trading it to the downside for targets of wave Y below 13K. If we then go to the bullish scenario on the macro time frame, this might be my preferred at the moment, where this is a 1, 2, then wave 3 is over here. This is a wave 4, and we're now on our way to the upside for wave 5, with the most common target being between 98K and 174K. Now this wave 4 over here is then a WXYXZ structure, and this is the high of wave 3. So this wave 4 over here is now part of a lower degree count inside this wave 3, which actually works really well. So then we have a yellow wave 1, 2, 3, 4, 5, and now this wave 4 over here, the yellow wave 4, is actually longer compared to this wave 2. So that actually works out very nicely indeed. And then this wave 4 over here closed perfectly right on top of the 0.5 fib taken from the low of 2 to the high of 3, which is a maximum target for wave 4. So we had multiple weekly candles closing right on top of the 0.5, which is absolutely fine. The absolute week low was made on the 0.618 fib time taken from the low of 2 to the high of 3. And we also had a high volume peak at the lows, which can signal a reversal area, just like it did with the low of wave 2 over here before a very big 3 to the upside. It might also signal a low over here before we have our bullish move to the upside for then a wave 5, where already the most common target has been mentioned, but the rare target, the yellow box, is basically between the all-time high and then 98K. Potential trading setups was basically the one that's already been in the past now, was entering just above the 0.5 when we were ranging over here, thinking that if this is going to be a wave 4, we're not allowed to close high time frame candles below the 0.5, so a safe stop loss was over here for then a trade to the upside. The more safer option, I suppose, is waiting for a bit of a retracement and then laddering the shorts, or the longs, excuse me, laddering the longs over here. Stop loss is then going to be below this wave 4 for then a move to the upside in a wave 5. If we then go to the high time frame bearish scenario first, I'll switch to the daily time frame as well. We have the WXY scenario now, but a little bit zoomed in. So we have a W, then the expanded flat in a wave X, and then eventually a wave Y to the downside in then a 3-wave structure. If we zoom in to this expanded flat scenario in wave X, we then have an A, B perfectly bouncing right on top of the most common target for an expanded flat wave B, which is in between the 1.236 and the 1.38, pulled from the low of W to the high of A. So this is very, very nice. And then we have an impulsive structure in a wave C to the upside. And what is nice about this impulsive structure is also that the most common target for a wave 5, so we have wave 3 over here, wave 4 over here, we are currently ranging inside the most common target for a wave 5, which is in between the 1.236 and the 1.618, pulled from the high of 3 to the low of 4. But not only that, we're also inside the most common wave C target area, which is the two 1.618s, as you can see, basically between 27.7K and 34K. And also, once again, you have here the 0.382, for this wave X, pulled from the all-time high to the low of W, which is usually a minimum target for a wave X. And then this 382 as well as this higher 1.618 are both at the exact same level, which is 29.6K. Also nice confluence again with this support resistance area for then a potential short setup, laddering these shorts in this area over here. Stop loss safely above, trading it to the downside. You might have seen, yeah, this is still a rare wave C target. However, If this is wave C and we look at the impulse of a wave C over here, then currently wave 3 is extended, which is also the most common wave to be extended, and therefore we don't expect wave 5 to be extended as well. So you can, with an impulse like this, you don't expect wave 5 to go all the way up here and reach this rare wave C target. That's why the invalidation for this setup is currently at 34k, and also the stop loss for this potential trading setup down to Y is also above this level. If we then go to the bullish scenario, we have a WXYXZ. Now wave X over here just missed out on hitting the 0.382, which usually is a minimum target, but it can happen. It is volatile, it's crypto after all. And wave Z hit the rare target, which is the 0.618, pulled from the all-time high to the low of W to then the high of wave X. However, it's quite, well, I suppose logical that wave Z is stopping at this 0.618, because we know now, after seeing the macro count, that also the 0.5 Fibonacci is right over here, and we don't want to see high time frame candles closing below. So therefore this wave Z makes perfectly sense. And then we have this 1, 2, 3, 4, 5 as just shown with the other scenario. And in this bullish scenario, it would be nice for wave 1 to end over here, because then again, we have the support resistance area as well as the other confluences in this area, as well as then a wave 5 zone over here. Potential short setup is then entering in this area, stop loss above, trading it down. Most common targets for a wave 2 in this scenario is between the 0.5 and the 0.786, which is basically between 21.1k and 17.7k, with by far the most common target being the golden pocket, which also has nice confluence with this low over here for maybe a little bit of a liquidity grab for then a big trade to the upside following the bullish macro scenario as well. Stop loss below this wave Z and then trading it all the way to the upside. If we then go to the medium time frame count, I actually have only one count to show, because in both the bullish and the bearish scenario, as just shown on the high time frame, this is the end of a wave 5, and this is either going to be X and we're going to be looking for much lower prices for wave Y, or this is going to be the yellow wave 1 and we have wave 2 over here before then eventually a big 3 to the upside. However, the target for this 5 and this final leg up is the same for both scenarios. So let's have a look, right? In this scenario, this final leg up in the green 5 over here, I'm looking for this to be an extended wave 1, so not wave 3 being extended, which is most common, but now a wave 1 that is extended. And therefore, because wave 1 is extended, the targets of a wave 2, 3, 4 and 5 change compared to a normal impulse, which I believe and I think is important to know if you want to trade Elliott Wave related stuff. So in this scenario, we have a 1, 2, 3, 4, 5 in this wave 1. If wave 1 is extended, the most common target for a wave 2 is between the 0.236 and the 0.382, very nicely respected indeed, before then they move to the upside. If wave 1 is extended, wave 3 does not have a target. That's quite interesting, right? But wave 3 doesn't have a target. So this is perfectly fine. You can still count 4 waves or 5 waves, like an impulsive move in this wave 3, ending over here. So that is why the high of my wave 3 is over there. Then we have wave 4. And if wave 1 is extended, the most common target for wave 4 is in between the 0.236 and the 0.382, which again, as you can see, has been very nicely respected. And then currently, in my opinion, this is a move to the upside for then a potential wave 5 to also finish the green wave 5. Can it be finished already? Yeah, maybe. I would like a little bit higher, also because we have some confluences right above at around 30k. It's the psychological level of 30k. We would also hit the Fibonacci's as shown on the high time frame and the macro time frame of wave X, for example. So yeah, I think a little bit more upside would be very nice, but hey, I'm not controlling price. No one is. We can only see and observe what price is doing and react accordingly with our personal trading strategy and entry requirements. The most common target for a wave 5, if wave 1 is extended, is between the 0.618 and the 0.786, taken from the low of 4 to the high of 1 to the low of wave 2 over here, which is basically between 28.9k and 30.5k. So this area over here is very interesting. And in this particular scenario, as with most Elliott Wave scenarios, one would then enter or ladder shorts in this area, ladder it all the way up for this potential trading setup, stop loss safely above, and then eventually trading it to the downside. And then the question is this going to be a wave 2 on the higher time frame, and then the target is maybe about here for the golden pocket, also taking the low of wave 4, so about like 19.5k-ish, or is it going to be a wave Y for much lower targets? Well, that is yet to be seen, because we have to first see and wait how price is going to move to the downside, if price is going to move to the downside, of course, because again, there's always the probability we would continue to the upside. And if we then go to the lower time frames, I'm only going to show you 2 of the low time frame counts in this video. If you want to see the other low time frame counts, make sure to check out my previous video. But the 2 for me that are currently most preferred, I suppose, is that we're still looking for this wave 5, right? So this is the low of wave 4 in an extended wave 1, 2, 3, 4, looking for 5 to the upside, the green 5, right? And now we are working on our wave 5 to the upside. In this particular scenario, this is then going to be a wave 1, then we have a wave 2, which is a 3 wave, then we have 3, 4, 5. So a little bit of an ending diagonal, right, in the wave 5, which is also a very ranging pattern, which could fit also. It's now weekend, of course, so I mean, weekend is often low volume, bit of ranging most of the time. But in this particular scenario, this is the first impulse to the upside. And then over here, if we actually go to, let's go to the 15-minute, you can see that this over here is a zigzag. It's a 3-wave structure, very clear 3-wave structure. And then this can be deemed a W. And if we then go, so a zigzag in the W, then an expanded flat over here in wave X, which is possible. So this is then a 3-wave structure followed by a 3-wave structure, and then a 1, 2, 3, 4, and eventually some sort of a diagonal over here in the 5 to end wave 5, also taking the liquidity of these highs, taking the liquidity of these highs over here with the wick for now potentially then a move to the downside. Now, as you can clearly see, I do not have a short setup over here because I deem it pretty risky, also because we have bullish divergences still on the chart for potentially more upside. They don't have to play out. If we look at the CVD, they don't have to play out per se, but you know, you don't want to really trade against it at the moment, so no short setup for sure. However, if we would move to the downside this low, which I guess is not necessarily the preferred of the 2 scenarios I'm going to show you, but if price is going to move to the downside in a 3-wave structure for then a wave Y, taking this low over here, I do have a very nice target box, as you can see on the chart over here, between 27.162 and 26.9k, which actually consists of a daily naked point of control, the range point of control of this range over here. There's a daily over here as well, so quite a nice amount of confluence. Of course, the 786 is right here as well, and also the 786 is a perfectly fine target for a wave 2 in an ending diagonal, so a 1, 2, and then eventually more upside to come. Now, the other scenario that I like to show you is also actually an ending diagonal in, well, looking at what is happening at the moment and how long this has been going on. Currently, again, wave 1 over here, followed then by this being a wave 2. It's a little bit tricky to really get this into a wave 2 because then this looks like a 3-wave structure, like a 5-3-5, which then is like a W. This has to be an X, and then this has to be a Y, but this Y is quite short in time compared to this W. So, you know, both of the scenarios have their benefits as well as their problems, I suppose. But in this particular scenario, we just say, hey, this is then the low of this wave 2, and wave 2 up to wave 3 is going to be some sort of a zigzag. So this is then a 5-wave structure in a wave A. So we have an A, then we're looking for a wave B, before then a wave C to the upside. The most common target of a wave 3 in an ending diagonal is between the 0.786 and the 0.886, which is pulled from the low to the high of 1 to the low of wave 2 with the trend-based fib extension tool. And in this particular scenario, the long setup is entering in this area over here. Now, of course, risk to reward wise, yes, the 0.382 is a target for a wave B if this is an A, B, C, but then the stop loss is really, really long, and the risk to reward ratio for this to be the main target for a potential ending diagonal wave 3 is absolutely rubbish. So yeah, you could get maybe a 1 to 2 if you reach the 886, but you know, that's stretching it. So preferably entering lower golden pocket area, for example. Also over here, we have these 2 red candles over here for a little bit of structure as well to support price if it comes to the downside. So that would be the best setup, stop loss below the low of 2. And then with the other scenario over here, you can see that this scenario has a lower entry because if this moves to the downside, and with the basically with this scenario, if we trigger the stop loss, then potentially this one then comes into play to ladder potential longs over here, stop loss then below the absolute low to eventually the downside. Now, if these lows are going to be hit, then in my opinion, that means that wave 5 is going to be in, which is, actually I wasn't planning to show this, but it's going to be this scenario. So then we have wave 5 already in, and then this has to be a move to the downside, because below this wave 4 over here, there's simply not much confluence, there's not much support at all. And if we're going to take these lows, there's not much structure holding price, not many other confluences here. The first target box that I have is literally down here at 24.85k with some nice support levels as well. So yeah, you don't want to see price going below here if you're in the long setups. However, if it does, well, then in this particular scenario, of course, also with the medium time frame and the high time frame scenarios, shorts are being laddered in this area anyway for then a potential short trade. So yeah, I hope this video was helpful or valuable to you on this Saturday. I hope you have a great weekend. I'd like to thank you for watching and subscribing. We're almost at 700. The channel is growing so ridiculously quick, I can't keep up, but thanks guys, really appreciate it. And I will see you at the next one. Bye bye.